Catherine in California on the money line. Catherine, talk to us.
I have a 5/1 ARM at 4.25%. The loan resets in September 2010. I purchased my condo for $397,000. I'm guessing now it's worth about $315,000. And now I still owe $296K on the mortgage. I'm trying to refi, but I'm not sure if I can. The problem is my mortgage is with a credit union at work, and it is not owned by Freddie or Fannie. I'm frustrated because I feel I've done everything right by purchasing a home I could afford, putting 20% down originally, and I have an excellent credit rating, but yet I think I can be stuck with a mortgage I can't afford if I'm unable to refi. Is there any way I could possibly refinance?
Well, Catherine, first of all, beautiful, beautiful home, and you did the right thing. You put the 20% down. Let's take a look at your 3 C's. Your credit, for example, right now at 780, you have a great credit score. The collateral, you're down to about 6% equity, and that hurts surely a lot because, unlike Shauna, she didn't put the money down. You put that cash down, and it has disappeared. And you also are looking at your capacity here. You've got $95K in income, and this is what I'm a little concerned about here, Catherine, because you're looking at a mortgage that is more than 3 times what you take home. So let's head over to Rodney. Rodney, what do you think, looking at where Catherine's at? She put that 20% down. It has disappeared. So what can she do?
Absolutely. Number one, Carmen, her credit, like you said, it is fantastic. Number two, her collateral. If prices continue to drop in California, you're going to continue to see the same issues that are out there. You know, one thing on these condo loans, lenders will want at least 10 to 20% equity in order to refinance it. I think one option would be take a little bit of savings, pay down your mortgage in order to be able to refinance. However, Carmen, where I would disagree with you would be on her income and her debt to income ratio. You have to make sure, according to conventional standards, she would be approved for a refinance based on her debt to income.
Oh, but Rodney, even though she's approved, doesn't mean that she should really do it, because here's the thing. When we look at your budget, Catherine, you've got a ton, by the way, in savings. However, when it comes to your income and what your monthly payments are going to be, it's going to be more than 30% of your take-home every month. And Catherine, it doesn't leave a lot of room for all the other things in your life. Doug, what do you think?
Real quick, 2 choices for you. I think, Catherine, the first thing that you could do is go back to the credit union and try to negotiate with them to either extend your term or refinance internally, since it is outside of the normal conventional channels. The second thing that you could do is take some of that $94,000 you have in cash and come to the closing with a check. And the other thing it'll do is reduce her monthly expenses that you're paying. Oh yeah, you're going to give up some cash, but you'll reduce your monthly payment, which at the end of the day is not going to hurt you.
But it's hard after losing that 15% of the 20 to put more money into that. But Doug Flynn, you have some actually good news, because Catherine, I know you've got this arm that's about to reset. However, it may not be the ticking time bomb that you think it is.
Yeah, there's a lot of confusion about adjustable rates. When they do reset, you have to understand what it's tied to. If it's tied to LIBOR, which is a common index, if you look at the current rate, add your index plus the LIBOR rate, you get like 4.4 if it were to reset now. So you had mentioned, I'm concerned I might be stuck with a mortgage I can't afford. If it were to reset today, there really isn't much of a difference. I'm not saying you shouldn't do it for the long-term benefit, but really get a handle on what it would adjust to so you can understand that maybe you're not under the gun to do this today.
Yeah, Catherine, so what do you think about using more of that cash? Are you afraid of putting more cash into the home since you've lost so much already?
Yeah, and it's not a place I really want to stay in forever.
That changes
I want to rent it out. Well, I would like to rent it out.
Oh, so
I do want to keep it, but I want to move.
Okay, you want to continue to hold on to it.
Yes.
I see. So, Rodney, that changes things. If Catherine were to want to leave tomorrow, then we would say definitely not worth looking at the refi. But she wants to keep this as an investment property.
You know what? And Carmen, in order to refinance on investment property, you will have to have 25% equity on most condos in order to refinance. So, Catherine, that would switch the strategy and refinance right now if you can before you rent out that property.
Absolutely, Catherine. You definitely would have to do that before you leave the property. But good luck. You are in great shape in terms of what you've got in savings. So keep that up, Catherine. Now, Jennifer in Texas, you're on the money line. Talk to us.
Hi, my husband and I have lived in our house about a year, and I'm interested in refinancing with the lower rates. But I would also like to roll in a new pool with our refinance. And right now we're at a 30-year fixed rate at 6.25%. But I'm interested in the 30-year fixed rate, about 4.75%. My husband and I have excellent credit. We've got substantial equity in our home, and both mine and my husband's salaries are stable. So my question is, can I refinance and use the equity to roll a pool all into one mortgage?
That is a very good question, Jennifer. First of all, let's take a look at what you've got in terms of the 3 C's. Now, we're looking at this as a traditional refi at where you're at. You have a credit score, decent credit score. I'd love for it to be a little higher there if you can make it. Now, your collateral, you've got over 22% equity, and you do have substantial income. Basically, your mortgage almost matches your income, which is a great position to be at. However, Rodney, rolling in the pool, I don't think it's a good idea.
Well, Fannie Mae and Freddie Mac got rid of their purchase plus improvement loans about 6 months ago. So rolling in a pool into one lien is not an option. So Jennifer, I'd love to tell you that you'll be swimming this summer, but you're not going to be under this situation. And the other thing, Carmen, on this, you would think that you would be approved, but you know what? You're not approved, Jennifer. Make sure you call back in the next week or a month on this show, take out the pool, and guaranteed approval is there for you.
Yeah, because, I mean, Jennifer, on paper, you are fine without the pool. The pool is the problem because, Rodney, when you're looking to basically refi and roll in some home improvement there, you can't go above that 20%, right?
Yeah, on a cash-out refinance, lenders are tightening their guidelines where you have to have at least 20% equity. And when you go to get appraisal, they won't allow you to count that appraisal based on the pool going in. So it's as is in order to get the appraisal done on the property currently, Carmen.
Yeah, and you have a pool.
I love my pool, but I can tell you I pay cash for it. It's not meant to go into your home equity, and nor is your car, nor the other things that you buy in your life. If you have the cash, get the pool. If you don't have the cash, hold off. I'll be honest with you. It's a lot of fun, but it's also, besides building the pool, you've got to maintain the pool.
Maintenance costs.
It's very expensive.
And Jennifer, it's very dangerous when you start using your home equity, start paying for home improvement. Doug?
Yeah, you're already at 78% loan to value, so you're not going to gain much by refinancing. But I always like, whether it's a boat or a pool, find a friend with that, and you're much better off.
Let's find a friend with the pool. Thank you so much, Jennifer. And thank you, Rodney, for joining us. Rodney's going to be back later in the show to shed some light on the sometimes dangerous fine print on mortgages. Now, if you're having trouble getting your mortgage modified and you need help, we're going to be taking your calls tomorrow in our OTM Mortgage Clinic. So email me at carmen@cnbc.com, call or text, and you could be on the show. More solutions after this.